I'm Michael Anthony, your home loan expert, and I've got some awesome guests here. We've got Michael Queen and Andrew Ward. So welcome, guys.
That's correct. Awesome. We're glad to be here. Thanks for the invitation.
Absolutely.
Appreciate it, Michael.
Yeah, no worries. Well, first of all, tell me a little bit about yourselves. Just love to learn a little bit more about you guys and your business, and also, too, how did you guys meet?
So it's kind of a long story about how we met. Well,
it's all right. We got time.
That goes into the whole thing of how I first got into real estate. So basically, really funny story. I lived in Scottsdale, Arizona for 6 months. I went to community college out there at Scottsdale Community College.
Awesome.
And so my friend, he played football out there, and I really wanted to just go follow him and be like, hey, let me come join you and just play some football and, have a good time. So while I was out there, I needed a job. And so I met two entrepreneurs that started their own business, their own moving company called Shirtless Movers.
Shirtless Movers?
Shirtless Movers.
All right.
And so
I haven't heard of that one.
So you had the option of either, I guess it was like if you wanted us to like come in with our shirts off or whatever and like move all your furniture. It was like for maybe older women or something. I don't know.
You charge a premium for that, I'm thinking?
Yeah, exactly. And so anyway, they just had a really good entrepreneurial mindset, and they kind of rubbed off on me.
Got it.
And they gave me a suggestion on one of the first books I've ever read, out of high school, and that was Rich Dad Poor Dad.
Yep, great book.
Amazing book. Love Robert Kiyosaki.
That's right.
He's amazing, man.
Cash flow expert.
Yep, exactly. And so that just kind of shifted my whole mindset of, working your, the cash flow quadrant, working a 9 to 5, being employed versus self-employed.
That's right.
I guess I wanted to start off in the self-employed area, and I had at that time I had a big interest in, real estate investing and stuff. And so, moving back home to Georgia, I did some research on top real estate agents in my area, and, Michelle Queen's name popped up. And, so I was like, hey, I just reached out to her on Facebook and I said, hey, can I come in and just ask you some questions? I don't know what I'm doing, but
sure, yeah.
You know what I mean? And
pick a brain.
Right.
Were you licensed yet? I don't think you were.
No, I was not even licensed, nothing. And so I was like, what better way? Basically, how it all went down is what better way to learn real estate investing than to get your license and become a realtor and help other investors and help other families.
Right. And Andrew's a true rock star too. Beginning the first year in real estate, he did awesome, good with his clients, compassionate about what they were looking for. And he took it to a whole nother level for someone with his first year in the business. It really blew me away how good he did.
That's super cool. And the rest is history. So so that's how you guys met, right?
Initially, that's how we met. Yes.
Okay.
Sir. And it's basically been a family scenario ever since. We do things together as a family. We have birthday parties together and all those things. So I don't know, it's kind of just a relationship that'll never end.
That's sweet.
Right.
Whether he's doing real estate or not, we love him the same.
That's right. Cool.
Yeah.
So what is the team how does the team look right now? What does the team consist of?
Well, currently we have Michelle as our listing agent,
okay.
And she's basically the backbone to the business. She's the dream.
Oh, yeah.
She comes up with the dreams of how to do things. We try to figure out how to execute them, or I try to figure out how to execute them. She's a systematic person, does an awesome job. We look out for the best for our clients. Andrew is a buyer's agent on our team. We have Karen as a buyer's agent on our team, and Sherry Gilliam as a buyer's agent on our team. So 3 buyer's agents, okay. Michelle, myself. I do the operations side of it mainly, but basically I fill in the blanks.
Got it.
In a lot of different areas. I'll go to listing appointments if need be, or show property or walk land.
He's the utility man.
I literally do anything
create
it
depth,
takes.
Yeah, right?
Exactly.
I mean, seriously.
Right.
In this market, so crazy busy, right? To have somebody like you sort of running operations and working on the business is super important.
And then we're also we're flipping homes as well. So I'm in there doing hardwood floor or doing whatever I need to do to try to be hands-on with that. So just a hands-on kind of guy, I guess.
Right. So you're not only realtors, you're investing in your business, right? There's so many realtors out there that don't do that, which is amazing. I'm like, wait, this is your business, right? You know the business.
You know everything about it.
Right? flip some houses. And
It's just the difference of being career-minded versus job-minded.
Right.
You know, are we driving for a career or just somewhere to get a paycheck on Friday?
Exactly.
And we want a career out of this. We want to treat it as a career and hopefully retire from the business, you know, in a good time.
Yeah, absolutely. So when did Michelle get licensed? I mean, you guys are sort of like the team up in Cartersville, correct?
Yes, sir, we are.
Yeah.
It's kind of a long story. So Michelle got licensed in 2004.
Okay.
And she was working in a Keller Williams office in Woodstock, Georgia with some prominent agents there. And she basically said, can I come in and just shadow you and learn how you do this business and take classes and things of that nature? Well, she was living in Cartersville, driving to Woodstock, and she could see a lot of opportunities. So she thought about it. How can I open an office in Cartersville, Georgia? So she got with the right people. She actually established the Keller Williams office in Cartersville, Georgia. Recruited the broker or team leader, and basically the rest is history. I mean, she lives and breathes real estate, like literally, like it's everything that keeps her breathing every single day. Oh yes.
Isn't that awesome though? Like when you find something, and you guys, I can tell you guys are passionate about what you do. You find something you're passionate about, you love it. It's not work, right?
Right.
You know, like when I get up in the morning, right, I have my routine, but it's not like, you know how some people, there's so many people that dread driving to work. It's like, I got to work. It's not work, right? Exactly. It's what you do. It's your life. It's a hobby.
Mm-hmm. Right. And it's kind of unique for myself, like you know, talking about where Andrew came from and how he all began. I have only been licensed now for 8 years, and I started out working fixed operations with Ford Motor Company, did that for 18 and a half years. Wow. And the only reason I decided to resign from my position was because my wife was so busy in real estate, we didn't hardly see one another. So I thought about it, and I was like, what's more important?
There you go.
A marriage or money? So I chose marriage. And we created a business together. It's a husband-wife team.
So so I got to ask you, I mean, you know, I worked with my wife for a little while, and it not all that close. She was actually a loan processor until we had our first child, and I'll tell you about that in a second. But she was processing loans for our company and a couple other companies. So we worked, and I thought for us it worked well because we weren't together all the time. But it was really, really cool. So how does that work? I mean, has it strengthened your relationship and your marriage, or does it sometimes get a little bit like, okay, we need to take a break?
I really think it's strengthened us in a lot of ways, and the reason I say that is like we're passionate about everything that we do, whether it be our marriage or our business.
Right.
So there's times we do butt heads, and there's certain times that we'll say, well, aren't you doing this? Well, I'm doing that kind of thing. But in our reality, we've learned to protect each other's interests. So as long as we're taking care of each other in business and marriage, everybody else around us just works in harmony. That's really what it boils down to. We don't fight in front of or argue or anything.
Right.
We may disagree, but we disagree in a professional manner and have that topic later. But it's had its challenges, uphill, downhill. It's been awesome. Honestly, I couldn't imagine doing it any other way.
That's cool. Well, plus in real estate, you know, she's on listing appointments, you're doing your thing. You probably don't see each other as much as you probably thought you would.
Yeah. Right. I
mean, you guys are busy, right? Doing stuff.
Right. Yeah. And then like the cool thing with Andrew coming on board was I was working with buyers predominantly then. It was just her and I. And then I got so busy, and one night I came home very late, and she says, we need to find some help. She says, you got in this business so we could spend a little more time together since I was so busy, but now you're so busy, I don't see you.
Right. Yep.
So then, you know, of course we had some other agents come in prior to Andrew's talent, and
got it.
You know, now we grade everything by where he set the bar. So if they don't even meet the bar Andrew set, then we don't even consider.
You set the bar pretty high.
He did.
Yes, I did.
Everybody else coming in is like, man.
Whether they believe it or not, he really did. Yeah.
That's awesome. That's really, really cool. So, and again, how long have you been on the team?
So I was on the team from 2016 to 2018.
Okay.
And then I took a break to start a photography and videography business.
Cool.
Doing weddings and commercial stuff.
Got it.
I did that from 2018 to, I just started back real estate at the end of 2021.
Okay.
So
awesome.
Freshly back on the team.
Got it.
Ready to go.
Ready to roll
again. Yep.
That's sweet.
And the thing about it is, I'm sure we'll talk about this today, is how much the market had changed since he was in the business last to where it is currently.
Oh my gosh. Yeah. Right?
Drastically.
Big change.
Huge.
Right?
Yeah.
Well, let's talk about that. I mean, you know, what did you see? Like, you know, you were in it, left it for a little bit, came back. I mean, what was your impression of the industry, how it changed?
Right. So, I mean, even when I was in the business in 2000, I'll just use, the best year of real estate that I did was 2017. even in that year, you know, we were considered a seller's market.
Yep.
But we had a lot more inventory than we do now.
Right.
Prices were like half of what they are now.
Yeah.
It's literally insane.
Crazy.
So, you know, then I was helping buyers, and we could go in, we could see a house. It was listed on Monday. We could see it on Wednesday, be the first offer on it on Thursday. And
take time, think about it for a couple of days.
yeah, and
right.
close in 30 days, and we were good.
Yep.
But now if you do not go see that same home the day that it is listed and write an offer on it the day that it's listed and be the best offer, you know, right now in Bartow County, we're at, 103% over list price as the average. So the average list price to sales price ratio is 103%.
Okay. Wow.
And so, you know, if you're not in that price range, you're probably not going to win that offer.
Jeez.
You know, we have a lot shortened, you know, due diligence periods used to be, and that's where you do like your home inspection and stuff like that. And
14 days then.
Yeah, 14
Remember the old
days.
days?
Now they're 7.
Right.
Or 4. 4.
Yeah.
Honestly, 4. Financing contingencies. I'm sure you know that, Michael.
Yeah.
Either 0 or 7 or
that's right.
Somewhere in between that.
I mean, you have to. I mean,
you're
right
not going to
now,
get the offer.
Yeah. You got to be, I call it being all in.
Yeah.
Right.
Right,
So in my office, I have I don't know if you saw the whiteboard, but like I have my commitments that I'm going to make to my customers. And I have their commitments, right?
Yeah.
Their commitments, they've got to be all in, right? In this market, and if you're committed to buying a home, I mean, that's the word. You have to be committed.
Right.
Right.
Absolutely.
So Michael, what advice do you give when someone calls you about being pre-qualified? Where do you start in like instructing them in the next steps to be the best buyer possible?
It's a good question. So, you know, the first, you know, we'll have that initial phone call and we'll talk about, you know, just what their goals are. You know, if this is something they're looking to do in the next 30 days to 6 months, we'll talk about it, right? So we talk also about getting fully approved. So you have pre-qualified, pre-approved, and in our market as lenders, there is no standard, right? What somebody says is, you know, I've seen other lenders say, oh, they're pre-approved. What does that really mean? They may have just pulled the credit, looked at a pay stub and said, oh, here's your pre-approval letter.
Exactly.
Is that really pre-approved? Our standard here is so much higher.
Right.
So I say recommendation, it's almost really a requirement if they want to be serious about buying a home. We're gonna take their application. We're going to do a full underwrite. So we have a pretty cool program called our Certified Buyer Program. So we can actually underwrite their file 100% upfront.
Right.
And literally underwrite them on a to-be-determined property address. So their file goes through our underwriting channel. It just doesn't have a property address. So we can do a full underwrite. They're ready to roll.
That's awesome. And then actually know them as certified.
Exactly.
Yeah.
Yeah. So when you call, so I think it's super important for agents and lenders to work together as a team.
Absolutely.
Buyers, agents, and lenders, we're all working together, right? And we have to work together as a team. So I always tell my realtors I'm working with, hey, you know, Michael or Andrew, call me before you make that offer. Let's put our heads together and figure out what's the most aggressive offer we could put together without putting our buyer at risk, right? So if they've already been fully pre-approved, we'll go in with zero financing contingency. We'll do, depending on the area, we'll probably do probably a 6 to 7 day appraisal, depending on the area. If we're a little bit further out, we might add a couple days to that. If we're in town, we may go 4 to 5 days. And if they've already been fully approved, we can also do a 17, 18 day close.
That's amazing.
That's really good.
Yeah.
So
great.
it's, you know, we want to try to compete with cash buyers.
Exactly. Yeah. And that's one of the strategies, you know, we talk with our buyers in the beginning. That's one of the strategies we automatically tell them is, don't just get pre-qualified. Don't just get pre-approved. Go ahead and have your lender, you know, pretty much fully approve you except for the property address. Right. So that's perfect that you guys do that.
Yeah. I mean, you really have to nowadays.
Yeah. It's impossible.
And, you know, sometimes you get some, you know, sometimes buyers are like, well, you know, hesitant or, you know, I don't know if I want to do all that work. But this is the thing.
That goes back to motivation.
Got to be motivated and got to be committed. Because at the end of the day, if they're going to buy, you have to go through underwriting at some point, right? So you're either going to get underwritten up front when there's no stress because you don't have a house yet under contract. You're not dealing with inspection issues.
Timelines are an issue.
Timelines are an issue, right? But you go under contract and then you have to get approved for the loan. Then it starts to become more stressful for buyers. you're dealing with your inspection, right? You know, they're dealing with maybe there's an issue with the house, or, you know, they're measuring for furniture. I mean, you know, it's all the things buyers want to do. So it's like, hey, let's flip the script. Let's do that up front.
Right.
So I think it's just a huge benefit that we can give to a buyer.
Absolutely.
I mean, it's a gift, really. And our agents love it because they know we're that much closer.
Exactly.
And it makes the people that are more serious about just getting it done, and it probably weeds out the less serious, because
It does.
in all honesty, it's not as easy as buying a car as some may think.
Right.
So the people that have the car buying mentality when buying a home, those are the people that you really got to be on top of to get those documents turned in.
Absolutely.
All those things.
Yeah. And it's interesting too, because after, you know, we have that conversation, they'll fill out their information, and then, you know, the next step is document upload, right? Send in the documents or bring them to the office. You know, I welcome people to come to my office. I'm a face-to-face guy, right? You know, I'll tell a little bit about my history. So I've been in the business 25 years. So and I'm not that old, but right out of college. I mean, seriously, 6 months after graduating, from Ohio originally.
Nice.
So yeah, my business partner and I, good friend at the time, we were working for the common owners. I worked for a construction company up in Ohio. He worked for the mortgage company, common ownership, because the businesses sort of fed one another and, you know, complemented one another. And then after graduation, I love the numbers. I love the finance part of it. Construction, I was like, I could deal with that, but I love numbers. And my girlfriend at the time, who's now my wife, Allison, her father was a mortgage banker for 40 years in New Jersey. So just by being around him, learning about the business, I was like, this is a business we can really do. So after graduation, Jim and I decided, let's move south. Let's find a city south, because we were like, Cleveland, Ohio. Love my family, and I love where I'm from, but man, those winters are brutal. Right. So we're like, you know, let's go find a city down south and open up. And we visited a couple cities, Charlotte and Atlanta. We came here and we were like, this is it. We loved it. We knew the Olympics were coming. So we moved down here February of 96, right before the Olympics.
Awesome.
And started our company. Just, you know, Jim and I, and at the time, my girlfriend, soon to be fiance, now wife, she's like, you know, I'll come down south, but, you know, just got to make that commitment. You know, is marriage coming? Yeah, of course it is. So, but you know, she's awesome, and she also understands, like, because her father was in the business. You know, there's some great years in this business, and there's some rough years, right? So back to your point about having that support system, your family knows the business and they get it and they understand it. So I feel like I have that same relationship with my wife, because she's lived it, right? And we worked sort of together for a while.
Understands it.
That's it. Understands it 100%. So, but just being in this business for that long, since 96, definitely seen some ups and downs.
For sure.
Absolutely. What made you guys choose Atlanta?
I mean, we just fell in love. I mean, we visited, we literally, I mean, we're in Cobb County. We've always been in just this area. So we literally came down. We were like, hey, we had to find a hotel. It was right off, at the time, it was right off Delk and Powers Ferry. That was our first apartment in Cobb County. Nice. And I think since then they've knocked down the apartment complex. But, you know, I think somebody put up some townhomes or whatever. But we literally just sort of stopped there. We knew that Buckhead was a place. We wanted to check out Buckhead. That was a pretty cool place. Totally different. Now totally different than when it was. So we visited. The weather was just like, I think it was in the winter when we visited the fall. It was like 75 degrees and sunny. We're like, what is it in Ohio? It was about 30 and rainy. We're like, this is pretty nice. But we just loved it. Yeah. You know, and we knew the economics were going to work. Olympics were coming. It's going to bring a huge, boom to the area. So that was really it.
Cool.
Yeah. So it was cool. And Alex was talking about my kids. So now I have 2 kids. Mm-hmm. So quick story. So Matt is my oldest, who's now 18, back in Ohio. We're playing baseball for school up there.
Oh, nice.
And our second son, Ryan. So we have Matt and Ryan. And Alex was like, did you name your kids after Matt Ryan? Yeah. Like, no, I didn't, but I could see what you're saying. So we were, it was a funny story. So we were at the mall and they were young, like 3 and 5 years old. I think we're at Lenox Mall or Perimeter or somewhere. Mm-hmm. And we're just walking down. They're starting to get ahead of us a little bit. We're like, Matt, Ryan, get back over here. Everybody's like, where's Matt Ryan? Where's Matt Ryan? We're like, no, those are our kids. Those are our kids' names. But
that's funny.
Yeah, I get that question a lot. But, have you heard of the one? I don't know if you heard of the There was a house in South Forsyth. I believe it was an Alpharetta address. South Forsyth had 155 offers. Now, why in the world would anybody want that many offers to sift through, right? As a listing agent, that's somewhat crazy, but it sold for, I believe it was listed for about $550, and from what I understand, it sold for about $200,000 above list price.
Wow.
With no contingencies. So that just goes to show how much money is in the market, and there's so many more buyers than there are listings.
Right. And not all buyers that are buying homes are from Georgia. So whenever they're coming from California or New York, where the prices are way higher and the home values are even more expensive than they are here, they come here and look at a $500,000 home and they're thinking, man, what a deal. I'll buy 2 of these.
Exactly. It's like, wait a minute.
Yeah.
Right. New York, New Jersey, there's, we see a fair amount of folks from California, right? And they've got money. I mean, you see it, right? Tons of cash in this market.
Yeah, there was a young man that actually we helped last year that bought a home in a higher price point than what he came from. He lived in New York, the state of New York, not in the city.
Yep.
He said his home was worth $185,000 on the market there. His taxes were $12,000 a year. Gosh. He said by the time he got here and bought a home for more money, in his escrow account, he actually had a larger home that was more modern and had a lot more bells and whistles than the house he was paying an obscene amount of taxes on. So we're still fortunate that we live in a state where the real estate taxes are affordable.
Right. Yeah. I'm doing a deal out in Texas, and they're about 2% of the value, which still isn't bad compared to a New York, New Jersey, California. But still, here we're closer to about 1% on average in the metro area. Mm-hmm. Yeah. So that's a really affordable tax base. So I always tell my customers, do you need me on a Saturday? Trust me, ask Allison, my wife, she'll tell you. Mm-hmm. You know, it'll be like 5 o'clock on a Saturday, ring, ring. I'm like, oh, I gotta take this.
Right.
And it might be just, hey, look, we're making this offer on this property. Can you bump my letter? You know, maybe I had them approved at 500 and they need it for 520, right? Mm-hmm. Hey, no problem. I'll zip out the laptop and send it out. But having accessibility, right? I mean, you've got to be accessible.
Right. And it's good that you're so hands-on from beginning to end, because that's what your clients need. It's the most important thing they've ever done in their life, most expensive thing for that. And at this point in time, in most scenarios, and with you being so hands-on from beginning to end, that's what's going to set you apart from someone going online and just checking with an online lender.
That's right.
It's going to get passed from department to department to department. You deal with 15 people from beginning to end, and you never know if you have a question, who's going to give you the answer.
Exactly. And if they're sort of in that stage where they're just, checking out lenders and such, and I think they're, working with somebody like that, I'll say, listen, Saturday afternoon at 5 p.m., give them a call. Mm-hmm. Can you get that person on the phone? Try them on Sunday.
Right.
If you can't get a hold of them on the weekends, you've got to move on. And I'm saying work with me, but I'm just saying whoever work with me. Yeah, but I'm just saying whoever you work with, you've got to make sure they're accessible.
That's exactly right.
I mean, you as realtors, you do a lot of your business on the weekends, right?
That's
Saturdays,
correct.
Sundays, you're taking buyers out.
Exactly.
I mean, that's when things happen. I mean, Is that what you're doing? I mean, you're seeing a lot of buyers. I mean, I guess at this point, the days of saying, oh, I see a house on a Tuesday, let's go out Saturday, it's already sold.
No. We strongly urge, if you're working a 9-to-5 job and you get off at 5, we need to see that house at 5:30.
5:30, we're there.
Or on your lunch break.
Right. Or ask your boss, hey, do you mind if I take an
hour? Exactly.
Yeah.
And most people will understand, like most bosses will understand, because it's kind of like, I mean, if your kids were sick, could you go off and, pick up your kids?
Right.
But I mean, this is one of the most important things you're going to do in your life. So,
well, let's be honest. Most people are working from home anyway. They're like, all right,
exactly.
I'm working from home. I can cut out for an hour.
Exactly.
Do my work later.
Well, that, and sometimes Andrew will show them virtually. Like he'll just run through there, and if he's met the person before and knows what they're looking for, he can go there and say, here's a virtual look at it.
Good point.
And, they know I'm here. They know that we've seen it.
Yep.
So if we make an offer, they're going to, that's something we also do when
that makes sense.
Offers.
And with your video experience, I'm sure it's an amazing video.
Well, it's still just FaceTime. I can't go through all that.
But that brings up another good point, because I've heard, and again, I don't know if it's exactly 30%, but I heard like 30 or 40% of homes are sold now without even without buyers physically being in the home.
Yeah.
I don't know if that's true, but I heard it's like
true.
a 30% number.
That's
where
a huge number,
just through video, FaceTime video, or just looking online.
Yeah.
I mean, there's such good
tour.
virtual tours nowadays, drones and such.
Right.
I mean, are you seeing more of that, or is that more of your out of state buyers trying to?
A lot of times they want to see them virtually until they get here.
Got it.
They'll say, well, I can't be there till Saturday. I know the home will be gone. Can we see it virtually? You walk them through there virtually, talk about all the good and the bad,
Yep.
And if they want to move forward, get the offer sent in. At that point, if they're taking highest and best by a certain day,
Right.
at least they've had some exposure. And then if they happen to go under contract and they look at it in person, which we try not to let that really happen because we want to be fair to everybody that we work with,
Sure.
right? So if they get there and they like it, then they move forward and it's done deal.
So for our audience that doesn't know, can you explain what highest and best means?
Sure. We want someone's going to bring their highest offer, also the best offer that's going to net the seller probably majority of the time most money.
Right.
And also fit in the timelines
Okay.
that may.
So you're getting, let's say you got 10 offers, 12 offers, right? And there's a few that are pretty close. You'll send out a message basically to everybody that's offered and say, hey, we want please present your highest and best by tomorrow at noon,
right?
Or something like that.
Well, that's what we used to do.
Right.
Back when the market wasn't this crazy, people automatically know now. Just go ahead and bring your highest and best on your first offer, or I mean,
well, and you have to be more aggressive.
You're not going to get looked at.
You're not going to look. You can't go in a low ball.
Yeah,
right.
Exactly.
So something that Andrew and Karen, all of our buyer's agent staff do, and I always recommend to anyone, is like spend 10, 15 minutes with a buyer and talk about the market. Show them numbers, show them reports, show them things that they can actually utilize and remember. Because if you have never spent time with this person, you don't know if they're going to be the low baller or someone that's like ready to buy and move in 30 days.
Right.
So if you give them all the data up front and prove to them, hey, the market's very tight, you have to be aggressive, and they see it on paper to like visually understand what's going on, then they're more apt to make things happen.
Got it. So you're really educating them.
Yeah.
Right. Yeah.
I mean,
Just be a good realtor and do what you're supposed to do.
That's our job.
Right.
Is just educating our buyers on the market and just the best strategies going into the home search, into the offers and stuff like that. So that's the first thing we do is print out all these numbers that we're talking about, the charts, just kind of so they can visualize.
Right.
Okay, in 2020, average days on market was probably 30, or like 20 to 30 days, and now it's like 8. For the entire FMLS of Georgia.
Well, and I think it's important too, because, I'll talk to some realtors who are like, well, I don't really want to, I don't want them to think I'm pushing them into a decision.
Exactly.
And I'm like, no, I get that. Mm-hmm. However, I think to your point, if you're showing them the information, the data, you have to let them know what they're in for.
Right.
Because what'll happen is, they'll go slow and they won't act quickly, and they'll lose 2 or 3 homes, and then they'll realize real quickly, oh, okay, I guess what they were saying is reality.
Sometimes it takes that. Some buyers will trust you right off the bat with the numbers and stuff like that.
Right.
Maybe some buyers just think we make this stuff up and print it off and just make up the numbers. But eventually they're going to lose, 2 or 3 offers, and then at that point we have to give them a little boost of confidence and stuff.
Don't throw in the white flag.
And patience.
Right.
Yeah, exactly. Right. But we see a lot of that of, it takes 2 to 3 to lose, and then finally you get serious, I guess.
There's a couple of ways.
True.
There's also a couple other ways, or I say one other way to help buyers when they're looking at a home. So a lot of times what happens is they get put to a search and they'll send their realtor a home to look at. It's usually not the other way around. The realtor should be looking through the system, trying to find stuff that may fit their criteria, find old listings that have been on the market for a little bit of time.
Yep.
That'll be good for those buyers that are looking for a deal, they feel like. So if they're listed higher and they've been on the market for, say, 30 days, well, there may be a situation now that the seller's motivated. They may look at taking an offer of less, or they knew they would miss the mark in the beginning, but they don't want to talk about it.
Maybe if somebody's pre-approved with FHA or VA,
right?
Because I've noticed those are really tough to get accepted now.
They are.
Everybody wants conventional or cash.
Mm-hmm. Right.
So, but we've got some buyers. I mean, I feel real bad for the veterans because they've served our country, and it's probably one of the best loans out there, the VA.
The most safest to close.
Yeah.
I feel like when I get a VA pre-approval letter, that we're going to make it to the closing table with no bumps.
Yep.
It's going to be
But, it's unfortunate because there's such a negative connotation that and I think part of it is the appraisal. There's no appraisal contingency
right.
for VA or FHA. And I think that's
inventory clause kind of,
right. That's the big problem. So I think, we've seen success there. If the house has been on the market for a little bit, maybe it's a condition issue, or maybe it's location for some reason. Maybe the lot's not great, but if somebody, likes it, or if they can live with that, that might be an opportunity for a FHA or VA.
And then also for a buyer's agent, I know it's tough because it happens to me also with someone that wants to see just a single home. Like, hey, let's go look at this house on Friday at 2:00. And you look at it and you're thinking, well, what else can I show them on Friday at 2:30 or 3? Let's see how much time they have. So let's go ahead and set a couple hours aside.
Knock out.
And just look at 2 or 3 so you have a comparison.
Right.
Because someone may say, this house is too much. This house is worth, they get it priced at $250, it's only worth $225. When they look at homes that are other priced at $250, they may not be as good a condition, or may look at it as like, wow, that one's not that bad, and may give a different mindset. So, you don't really know what you're looking at until you compare to others in any scenario, I think.
Yep. And then you get the situation where, well, tell me about this. So you have a buyer, you take them out, first house, fall in love with it. They're like, this is it. And maybe it is, right? But then they're nervous because they're like, oh, wait a minute, we don't know what else is out there.
Right.
And you're thinking, oh my God, it checks all the boxes. This could be it. Yeah. But if you forego, and then, we've seen that. I mean, how do you counsel somebody on that? Because that's tough.
Right. It is tough. It's even as tough as someone that had the offer on one and they absolutely fell in love with it and then they didn't accept it. Now every house has to meet that criteria.
Right. They're like, well, it doesn't have what 123 Anywhere Street had. It's like, God, that basement. You remember that basement? So.
I think that goes back to the initial consultation with the buyer.
Tell me about that, because I know a lot of realtors have different buyer's consultation meetings. Like what do you do in that meeting? How do you sort of set expectations? I'm curious.
Yeah. So just to answer your first question right off the bat, about, they say they find that house and it's the first house and they fall in love with it and they're like, oh my God, this is it. In that initial buyer's consultation, we're showing them everything. We're sitting down and showing them everything that's in their price point, that's on the market, that we can go see. And so if that's the only house, chances are that's the only house that is the perfect one.
Right.
Just because inventory is so low right now.
Yep.
So that's, answering that first question that's probably the only house that's on the market at the moment.
Yeah.
But going back to our buyer's consultation, we keep it educational, and we try to set expectations with our team. And so, if I'm not available on the weekend, we have a whole team that's sit there. We have a showing agent, and we also help each other out as buyer's agents too. So if I'm not available, I have a team behind me that is, versus, if you're working with an individual agent, they may not have that weekend free. And so you may lose that opportunity.
No, we've seen that. So I think having a team is great.
Yeah. Yeah. And that, I think that's the way, the whole real estate industry is going to be going soon. Is
more teams versus individuals. Yeah, we've seen a more like a sort of a migration towards that.
So, we're just educating our buyers during that consultation, setting the expectations of if you see a house that you like, do not call me on the next weekend to go see it because it's going to be gone.
Text me right away.
Text me right away, or call me right away. Call my team right away if I don't answer.
Call somebody.
Yeah, exactly. Yeah. So this market is going so fast that that's just the way it has to be right now.
Right. What other challenges do you see? I know inventory, but besides inventory, what other challenges are you seeing in the market right now for buyers or sellers? I mean, I know there's not a ton for sellers, but other challenges for buyers besides inventory, or is it mainly just inventory?
It has, it's probably 75% inventory.
Yeah.
A lot of times when we get, inquiries and stuff like that, a lot of people don't believe that the market is the way it is. Mm-hmm. And so I guess that goes back to it's just so shocking to people that, a year ago we were at this price and now we're double that.
And that's where, and I talked to some people that didn't buy a year ago. Mm-hmm. Every once in a while you'll have the customer that just sort of says, I'm going to take a pause. And then they come back a year later. They're like, oh my gosh, the house that I could have bought last year is really not in my price range anymore.
Right. Exactly.
I mean, that's in a year.
Yeah. And let's hear from you. What do you think about where the market's going as far as interest rates and stuff like that? Because tell me if this is true or not. I've heard that a 1% increase in interest rates means 10% less buying power.
Pretty close.
Yeah.
I mean, that number, depending on the value, right, or purchase price,
right. So
it's about right.
Yeah. So say you're looking at a $300,000 house, and now the interest rates go up 1%. You can only afford to look at $270,000 house.
That number's pretty close. Yeah.
Cool.
And what we're seeing is, there's a lot of talk right now about inflation, right? You can't turn on CNBC, or Bloomberg without hearing inflation in the first 10 seconds. So everything's more expensive, right?
Absolutely.
So what we've seen is there's been a lot of talk about the Feds bumping the rates, right? And, they're expected to bump in March, right? They're supposed to start that process, and then they've been tapering the bond purchases. And what that is, they've been buying mortgage-backed securities for years, a couple $100 billion a month. That's really suppressed rates during COVID, brought rates down to where money was, almost free, right? Rates in the 2s and 3s. That's free money for the most part.
Exactly.
And why did they do that? Well, during COVID, they wanted to spur growth, right? Get people to buy homes, refinance, and people taking cash and investing. So that's why this market has just blown up, right? So now inflation's running hot, so they need to do something to temper that. So as they increase rates, it'll slow that economy down. So we've seen rates increase about 1.25% since January 1st.
Yeah.
And on a 30-year fix, that's a big jump in 2 months, if you think about it. So we feel like, are they going to plateau for a little bit? Maybe. With the war right now in Ukraine, it's, and our thoughts go out to them. It's just a crazy situation for sure.
Definitely.
That might keep the Feds from going too aggressive, because I think, we're feeling some effects just economically here. But rates are up. They're probably going to remain up, and ask between now and the end of the year, could they drift up another 0.5%? I think it's very feasible. Okay. So, but still, if you look in relation to history, I bought my first house in 1998, and rates were coming down from like the 9s and the 8s, and I told my wife, I'm like, if we could lock in under 8, like this would be amazing, right? We locked in at 7.875, and I called her. I'm like, well, you won't believe it. We got 7.875. We're like, this is great. But you tell a 24-year-old now you're going to get 4.5%. They're like, oh my God, what happened to 2.5?
Yeah, exactly.
It was 6.25 when I bought my first home.
See, right? And
I thought that was amazing.
And it was.
And they had to put 20% down.
Right, exactly. And now it's like, well, hey, you could put 3.5% down or 5% down. Shoot, we have programs 0 down.
Exactly.
Right. We have a program right now, 0 down, no PMI. So, there's some really cool things out there. And I think it's just people, you get used to something, right? You get used to something, and then when things change, it's like, oh, well, what happened?
Yeah.
So rates are still good. Still really good.
And speaking of rates, like even when you have someone want to sell their home, like they're just like, I'm going to list my home on the market.
Yeah.
And then they go and talk to a lender, and they're thinking, wow, I bought this house and my interest rate was 2.75 a couple of years ago. And now the house has cost more. My interest rate's higher. So I think I'm going to hang tight for a little while. That's been a challenge.
That's true. That's
and
right.
It's a logical challenge, but you have to go back to say, okay, now what made you want to sell? Well, the house is just small, or whatever it may be.
Right.
And then realize, is this going to be a temporary fix, or are the rates going to continue to raise, and the prices of homes continue to raise? If you wait longer, you may be in worse condition.
That's right. Home value's going up, rates going up, and that's where it's hard for like that first time home buyer.
Yeah.
I feel bad for them because it's a tough market right now. Depending on what the income is, if the income's moderate, it's a tough market right now.
Mm-hmm. It was kind of funny. I think it was Andrew and I were listening to a podcast not long ago, and they were talking about renting versus buying.
Sure.
And one of the things that someone said on there, well, would rather rent for the next couple of years instead of buying a home. And the person asked him, well, why would you rent? That's what do you call it? 100% interest is how he said it.
Yeah, I've heard that. I think I may have used that before.
Yeah,
because
that's 100% interest.
It really is.
Yeah.
No, you're right. So
you're paying the landlord's mortgage off more than likely, or
that's true.
Or you're just stuffing his bank account.
That's right.
His or her bank account.
And then the rents you've seen, rent inflation is actually higher than the appreciation on home mortgage prices on a monthly basis. mean, you go look at renting right now; it's ridiculous.
It is. It's
I mean, it's crazy. So you know, we tend to be able. We have a when we meet with somebody, we like to meet with them face to face or Zoom at least, because we feel like you can build a better connection with them. But we have something called our Smart Start meeting, and in that meeting, we talk about a rent versus own analysis if they're a first time home buyer, because we're going to look at that. Yeah. We get a lot of people that come in and say, "Hey, my rent's $1,200. I'd like my mortgage to be $900." I'm like, well, wait a minute. Your rent's $1,200, and you're making it fine. It's hard to do that. Yeah. So even if the rent or the mortgage is equivalent, or maybe it's $200 or $300 more, we're going to look at that breakdown. Well, how much is going towards principal? How much is going towards interest? Right. That principal portion, that's saving money. Right. That's saving. That's forced saving. You're putting money into your equity, into your home, which is that's increasing your asset on the balance sheet side. It's very similar to putting it into a bank account or a mutual fund. It's just in your home.
Right. Right. I've never looked at it like that. I like that.
You're
analysis.
Just shifting your, right?
Yeah.
So, you know, when you break it down, so you're paying interest, and if you're, you know, if you can itemize on your taxes, you might be writing off that interest anyways. So we tend to look at that. And then once we're done with that analysis, we're like, okay, this makes sense. You know, for a $1,300 mortgage payment, I might be, you know, putting $400 a month away in principal, and over a year, that's almost $5,000 I've just saved. Whereas with rent, zero.
Exactly.
Right. Plus pride of ownership and appreciation, of course, all the things you know.
Right.
So, so let me ask you a topic that comes up. We've been seeing it more and more with like the younger generation, crypto, right?
Yeah.
One of the things we always look at is, okay, where's your down payment coming from? Interesting now, I've seen it a lot more lately is, well, you know, I've got my Coinbase account, and I know what Coinbase is, you know, you know, just with the crypto, right? I'm like, okay, Coinbase. So they've got some type of crypto or, you know, Bitcoin or Ethereum or something. Do you get people, we may get it more on the lending side, but I don't know if you've seen people talking about that at all.
Like, I've seen it one time in a cash deal where someone's going to cash out their crypto to be able to pay cash for a home.
I've seen, okay. So yeah, it's, you know, it's coming up a little bit more. I've seen once in a while, I even saw on a listing, we take crypto. Okay.
And then what was funny is like, literally he said, when I was buying this cryptocurrency back in the day, I was trying to get my friends to be part of it. And they just laughed at me. So you're just throwing money away. And he'd bought, I think, Bitcoin for like $470 a share, and he had 10 shares.
Oh my gosh!
And now they look at it and say, "Hey, can I borrow some money?"
Yeah,
because
can you lend me some money?
He's doing very well for himself.
That's right. That's right. Well, I've seen it lately, and so the long and short of it on the crypto is because it's not traceable and sourced funds, you can't really use it for down payment money. But we can coach them, you know. Right. Whereas if you cash it out, put it into a bank account, you let it season for 60 days, you can use it.
Right.
So, but that'll be interesting to see, you know, if that gets regulated and how that plays out in the future. But yeah, I was just curious if you ran into that, but we're seeing it here and there.
I'm sure Andrew's generation is more familiar with the cryptocurrency stuff, because it's hard for me to invest in something that I can't really touch or see. Right.
Or even understand the blockchain. You know, I watched a video on the blockchain a few weeks ago, and I'm like, and it was about a 10-minute video. I'm like, oh my gosh.
Right.
Yeah.
It's interesting.
It's absolutely mind blowing. Yeah. Like, I don't even think my generation can fully fathom like the changes that are going to happen to, you know, the economy and just like our world in general, because of crypto and the blockchain and stuff like that. Like I've tried to like sit down and do like a full course on, you know, crypto and stuff. And I'm just like, I still don't fully understand it. So
when I've asked questions, they say, don't worry, it's just the people's money. Everybody's investing their money into this. That's what makes it so great.
Yeah.
Yeah.
What do you guys
think? I mean, it's great.
What do you guys think about buying real estate in the metaverse?
Yeah, I mean,
is that a real thing, or is that just?
It's already happening. I listened to a podcast. NFT real estate. NFTs. I don't know what would you describe it as, but
the monkeys that people are buying, like what? That's what it's
the
like.
Apes,
right? I just don't quite get it. I'm sending I'm sending on Instagram. I'm sending my son Matt, who's 18 in college. I'm sending these things because he's interested in it. I'm like, listen. Do your research. All I got to tell you is do your research and then teach me.
Exactly.
Right?
That generation, like that's 17, 18, 19 right now, they almost like fully understand it and are immersed in that.
Yep.
Is it where you buy like a property and you own like 0.00012% of it or something? Or?
Well,
A non-fungible token, right?
The way that I've been told how it works is, by the way, this is Alex on the podcast. I'm behind the camera.
Alex is the man.
So the way that I've been told, and the way Gary Vee explains it kind of easily, is that, you know how like the check mark on Instagram is a pretty big deal for people, or like a lot of followers?
Yeah.
That's like digital currency, because that can give you, leverage when you're trying to talk to a brand,
Right.
or there's a lot of value in those big numbers. So it's the same way with the metaverse. Like when something has an applied value to it, no matter where it is, it's still going to have some like that value, that even though it's, quote unquote digital, just like a high number of followers on Instagram, you can still leverage that to make money. Huh. So that was the way, like, I could put my eyes on like a check mark or like 1 million followers and see the value there.
Right.
So it finally it kind of clicked for me a little bit. I mean, there's a lot to learn still, but
There's so much to learn.
Like, yeah.
I mean, you can buy real estate in the metaverse now.
I know.
Like you can buy yourself a little lot on the street or whatever. I don't know.
Still don't quite understand.
Crazy.
It, right. When my son figures it out,
We'll
get back and have another podcast about that. Right.
That's right.
That's a whole nother. Yeah, that's a whole nother topic.
Crazy. So talk about like trends. Like, are you seeing anything like any new trends coming into the market? Like I've heard a little bit like tiny houses, or I mean, just anything that you're seeing that's sort of a little bit different.
Yeah.
I wish in some locations they would do a tiny house, I guess, community. I think it would be kind of neat to see that.
Yeah.
But a lot of the codes that they have in most counties require minimum square footage and a minimum pitch on a roof. So it kind of prevents those things from happening. I almost feel like that someone should create a community and apply for a variance so they can get it pushed through.
Yeah.
I think it would be a neat thing to have. And like near a downtown area, make it more urban. I think like an urban tiny home neighborhood would be a great thing for someone to begin somewhere.
Got it.
I mean, I think it looks a lot better. I think tiny houses would look a lot better than like a mobile home park. Just because of the architecture.
Right. They're cool.
They're super cool.
It's like one of these HGTV shows.
Yeah.
They were doing, I don't know if it was about tiny houses. And I mean, some of these houses are insane.
Exactly.
Small,
Exactly.
but they're crazy.
I know in the state of Florida, there's some of those state camps that allow those. Okay. And they're shingled roof, 5-pitch, those type of things. It's kind of neat.
Elon Musk lives in a tiny house.
He lives in a
$50,000, or it's like a shipping container.
It's a shipping container.
Yeah. So
oh my God.
The shipping container is the new trailer park.
That's what I've heard.
I really like those a lot. I have a buyer right now who's interested in buying land and wants to put a shipping container on it. We're just having problems, obviously, with the the county's code and stuff like that.
One of the biggest pushes is it's all recyclable. Am I saying that right?
Recyclable.
Recyclable.
Perfect.
Wow.
Yeah.
So
I mean, you're not only are you living more moderately, but you're also reusing things that would technically destroy our Earth.
And I mean, you can be totally off the grid in one of those homes too. So, and I think that's part.
That's what I've heard. Yeah.
Yeah, I think that's
what we're trying
probably.
to say is you're gonna be in the next 10 years. You're gonna be giving NFTs out to buy cargo homes.
Right, I think so. Right.
Yeah, exactly.
Get ready.
We got NFT for your down payment.
Yeah.
Oh my gosh, you never know.
So a lot of the trends we're seeing are like cargo homes. I know there's a good bit in Atlanta now. I don't know if you've seen, but I was talking to a lender the other day who said it was SWBC in Atlanta, I guess, but they've closed on a number of like shipping containers in Atlanta just because they're starting to pop up and you can get an appraisal for them now since they're selling or something like that. Another thing that's trending, besides that is barn dominiums. So they call it. Basically just like
really chic barns.
Let's talk about the barn dominium.
Yeah.
Do you have people call you and ask you about how to get a mortgage in a barn dominium?
I've never had that call yet.
Must
but
be.
I'm glad we're talking about it.
It must be.
That's a Cartersville call.
That's a Bartow County thing right there.
Maybe it is.
It's amazing how much we hear about barn dominium.
So, all right.
Everybody wants to buy land.
Let's hear about it.
They want to buy land and build a barn dominium. And basically, it looks like a barn. It functions as a barn, but it has a living area inside. And people use them for car shops.
Looks like a fancy barn now.
Personally, but they're very nice looking.
Yeah.
Wow.
They don't look bad.
No, I guess it's
cool.
almost like a steel building is the thing.
Yeah.
So
Okay.
They're really like luxury, and you can use them for wedding events or Airbnb.
And you can like put a
crazy.
shop, like a car shop in the back of them and stuff like that. And it's like industrial.
Wow.
It's like modern industrial, I think.
Insane.
I can't really give a good
Slash
definition of what it would be. Yeah. Rustic farmhouse / industrial. I don't really.
I'll put
know.
some pictures up.
Yeah, I gotta check this
Alex.
out.
But that may be something that you may be able to look into and offer that other people can.
Yeah.
Because it's a topic we hear it how many times a week.
Do you really? Okay.
Probably daily.
The only thing about barn dominiums right now is also going back to the appraisal thing and the code thing with the counties. So a lot of lenders are having trouble appraising them because they're not selling.
Well, there's no
they're
comps
just-
for them.
Exactly. There's no
Right,
comps.
right.
So, yeah, that's a tough thing we're finding right now. So it's usually, I think right now it's just all cash deals. Maybe private financing or something.
Exactly.
So.
But you never know.
They're not very expensive. At least a cargo home isn't. So it's like a really great time if you want to spend some cash.
Exactly.
There you go. Well, there's a lot of cash out
Elon
there.
Musk.
We've seen that.
Well, from a lender's point, he doesn't want to talk about cash.
We don't like cash. There's a lot of cash in the market. We do see
There
it.
is a lot of cash in the
Yeah.
market.
So you talked about geography. So tell me again, just refresh my memory and also for our audience, what areas do you guys cover? I know you're out of Cartersville, but what areas will you cover?
I'd say we're basically centralized to Cobb County, even though we're in Bartow.
Yep.
We branch out within probably a 50-mile radius of Cobb County.
Got it.
So we're in Dallas quite a bit. Waleska, Jasper. We've even been as far south as Hogansville.
Okay.
I had a client that we helped in the past, and she refused for anybody else to help her, so I actually helped her buy a home in Social Circle.
Wow.
So,
Close to Athens.
Yeah,
Is that
we'll go
okay?
above and beyond. We'll make sure people are taken care of. And with the market being the situation is, the data, you can see it. And we all know the whole country is seeing the shortness of inventory. So everybody knows you got to be aggressive.
Right. I mean, I think the media is definitely, they've done a good job getting that out.
Let's talk about the do's and don'ts of once you're under contract, like from your standpoint. Because a lot of people don't think about all those things. They mainly want to go furniture shopping, and they want to think that, I can not have a house payment for a month. I can buy a new car and not have a car payment for a month, and I have more money to get furniture for my home or whatever. So things that don't want to be surprised at closing with.
Yep. So we're pretty.
Is this more like a first-time home buyer kind of thing?
It's all home buyers.
Not necessarily.
No?
It isn't just first-time home buyers. We actually have a printout, and we also of do's and don'ts during the process, and we also have a video that we send out as soon as they make application.
Nice.
So we'll talk about this as part of the pre-approval process, like what to do, what not to do. But generally, these are things that you don't want to do, right? We're figuring out the ratios, like what they can afford based on their current debt, their current income. So we typically don't want anybody pulling credit, right? Because if somebody's pulling credit, they're generally applying for credit, right?
That's correct.
So hold off on the credit cards. Usually it's not that, but the big one is furniture. Yeah. Oh, I saw this popular furniture company that had 22 years, no interest, right? It's a great deal. And I'm like, I promise you that deal will be around in 3 weeks.
Sure will.
It's not one day only for the most part. So it's usually like, look, I know that it's attractive, but you got to wait till after closing to make application, right? Now, the day after closing, they want to go apply and buy $15,000 worth of furniture, no problem. So the furniture is a big one. Hold off on it. Obviously, no cars, no credit cards. Just any major expenditure, don't do.
Right.
Okay, and I tell them, listen, if there's something you're thinking about, call me.
Yeah.
And then typically they'll call or text or email about, hey, the utility company needs to pull my credit. I'm like, that's okay. Yeah, it's for utility. That's okay. But don't change jobs.
Yeah,
during application, right? I mean,
yes.
But I'm telling you, once in a while,
Don't invest in crypto.
Don't invest in crypto. Right?
Something.
If you've got your down payment, keep it in a nice, safe, secure place, right? That doesn't have a lot of volatility, right?
There was one scenario where we had someone buying a home as a buyer. They had been at their job for 10 years. Great income, great job history. Everything was amazing. Well, during the home buying process, they literally decided they got offered a promotion. They took it.
Yep.
unfortunately, the promotion went from a salary or an hourly based job to a commission based job with a salary.
Yeah.
So then they no longer qualified.
That's right.
Because they didn't have a steady wage. At this point, it was 100% commission with a bonus.
Right.
And they didn't understand why. I'm making more money I've ever made, but I don't qualify.
Yeah, that's right.
But it was because they give up their guaranteed
structure
money.
of their pay.
Yeah. So what is the rules if you were to change jobs? It has to be like in the same industry, same field or something?
Right. So if I have, very rarely, but once in a while, I'll have somebody call and say, listen, I've got this job offer. And I know we're closing in a month or 3 weeks maybe, or we haven't gone under contract yet, but can we do this, right? So generally it is, if they're on a salary job now, it's in the same line of work, and it's going to be salary again, and it's a commensurate salary or better, then it's typically going to be okay. But Michael, to your point, if they go from salary to full commission, that's generally not going to work.
Right.
Or they,
what if they're jumping into videography?
Absolutely not. Unless you're getting a real big fat salary that Alex is going to pay.
Then you have to be 2 years self-employed.
2 years self-employed. Yeah. So
with tax returns filed and transcripts for 2 years.
That was my next point.
Yeah.
So I have a customer that moved from same company, moved from W-2. Now they're paying him as a contractor. But he's like, hey, it's the same company, it's the same pay, it's the same everything, except you're moving from W-2 to 1099.
Right.
So when that happens, you're really now considered self-employed.
Right.
And when you're self-employed, you need 2 years of tax returns. So that's could be a big issue. Now, you go from 1099 to W-2, that's generally, that's okay.
It's a better direction when buying a home.
Much better direction.
Right. Easier.
Generally then, a pay stub or two, you're good.
Right.
So, the biggest thing we tell our customers is talk to us, right? Just before you do anything major, call me. Let's just talk about it. Yeah. Generally, we can get around it, usually, right? And if we can't, we'll tell you.
Right.
Look, don't do it or sit tight.
Is there anything else about being a small business owner and qualifying for a loan that you have like the kind of down low on that you could?
I would say just keep good records, and obviously we're going to look at tax returns. You have to realize that if you're writing off everything under the sun to pay less tax, then you also have less income to qualify.
Correct.
That's the biggest thing to consider is, it cuts both ways, right? Mm-hmm. So you write off everything because your bookkeeper said, or your CPA said, hey, you can save taxes if you write off all these things. True. But when you come to the lender, we're going to look at that and also say, hey, well, you wrote off all of these things and now your income's this.
Yeah. Right.
Now, we're really good at reading tax returns, so we can add some things back in. We can add back in depreciation, depletion, but most people, depending if you're in a service business, like a real estate agent, for example, you don't typically have much depreciation. Alex might, right, with all this equipment, he may have some good depreciation, but we're really good at maximizing that. And I'll also tell my customers, look, like right now, I've been looking at a lot of tax returns for 2021 before they click the file button because I have their 2020s. Now I'm looking at their 2021s because we have to average the income. Mm-hmm. So now I'm looking at it saying, okay, got it. Here we have a draft of the 21. Let's average it with your 20. With this, you can afford X amount of dollars in a house. Now they're like, oh, I really want more. Okay, well then if you want more, you got to reduce your expenses.
That's right.
So we'll help them with that.
Yeah. Cool.
Just to let them know what they can qualify for.
And another question you probably know the answer to already. So if someone makes their certain gross of income per month, where do you think their house payment should align with that gross per month?
Good question.
What percentage?
So it should be somewhere probably 20 to 25%, I think.
Okay.
That's housing payment to gross income. Okay. People have different opinions on that.
Sure.
And I think it also
depends on if you're talking to Dave Ramsey or...
Right. That's right. He's right. He has definitely a certain opinion on that. Now, I would rather be more cautious than more aggressive.
Yeah.
Right? If I had to go one way or another. Because, you start having kids, they're expensive, right?
Right.
But we also tend to look at the whole thing. That's what we like to do is look at, do they have a budget? Right. We can help with some of those things. We're not CFPs, we're not financial planners, but we do look at, hey, look, are you setting money aside for emergencies or for contingencies. You know, you guys are in real estate, right? You see things happen to homes, right?
Yes.
Yeah.
You got to have some money set aside. So we don't want to put somebody into a house and they're going to be strapped. You know?
Right.
So one of the things that we've seen since the Great Recession is people are much more conscious of that, right? Because some of the people buying homes now, some of the younger generation, they saw their parents go through it, you know, and they don't want to go through that.
Right.
So
And their parents remind them as well what they went through.
do.
Yeah.
Absolutely. Yeah. So
just thank goodness there's not really many adjustable rate mortgages being pushed out.
that's right. Well, and I think that's a really good question too. You mentioned it. There's been fixed rate. I mean, there's probably very, very few ARMs out there, adjustable rate mortgages. It seems like just about everything we've done, I'd probably say 95% of the loans we've written in the last, 7, 8 years are fixed rates, right? Do you get the question, are we like, is this bubble going to burst? Or are we going to is it going to crash? I've had people tell me, I think I'm going to wait till the market,
Every day.
retraces.
We hear it a lot.
Every day.
So
we hear it a lot.
I'd love to hear what your response is to that. What do you think?
Well, I always get the theory of what I've been taught. So they told me when I see interest rates rising and I see home inventory rising, that's when there's a chance of a bubble because you have just as many people looking as you do homes being sold. So just say right now we're in a scenario, say there's probably 1 home to 6 buyers. So when you have, there's 8 homes to 6 buyers and the rates are rising at the same time and basically everybody's I think really what happens is whenever things go so easy, people become complacent about what's going on around them and they make bad decisions. So right now when everybody's having to press to make things come together and really work to make things happen, it takes a lot of energy to get someone under contract or a lot of energy to find that right home. People are going to make better decisions while doing it.
Right.
Less complacency involved. So I always go back to say when you start to see the interest rates rise along with the inventory rise, then we may see a bubble. But currently, I don't foresee that anytime soon because of the lack of inventory. The prices are rising.
Right.
Interest rates are creeping up. But you got to realize is now the time to buy, or if I wait, I'm going to be paying more for the same house I could have bought now.
Right.
That's right.
So where do you want to be now, or where do you see yourself in 2 years? And I've also told buyers, if you're buying a house now, don't think since you bought a house 2 years ago and sold it and made money today, that in 2 years you're going to be able to do the same thing.
Correct.
I don't want you to get the wrong idea of what's happened because it may be a scenario where you're here for 5 to 7 years. And be comfortable if you're there for 5 to 7 years. Don't buy it with intentions of being only 2.
Right. Exactly. Yep. And I think people that ask me the question, I lived through the 07, 08, 09 crisis, right? Horrible, worst market. This is worst market since the Great Depression, right? It was awful.
It was horrible.
So people say, well, are there any parallels between where we're at today and at that point? And I really don't see any parallels with exception to obviously price appreciation. However, it's completely different right now because the loans are better, right? People have to, for the most part, you have to prove your income, right? There's no more stated income, stated asset loans, which were garbage loans in the first place.
Right.
They're better credit quality, right? The appraisal process is as you guys know, completely different now.
That's right.
Regulated. I can't just call up Bobby and say, hey, can you do this appraisal for me? I mean, no.
I guess I was on a contract for $550 and $550 would be a good appraisal for it.
Right. Yeah. Can you make $550? Oh, you got the job. I mean, there was some crazy stuff that we saw happen in this market. Tons of fraud back in 08, 09.
Yeah.
It was fraud everywhere. Lender fraud, unfortunately, borrower fraud, appraisal fraud. So this market is just so much more sound, in my opinion, from a lending perspective, the borrower's perspective.
Right.
The appraisal process is way better. It's not perfect, but it's better. So I think that makes it a much more sound market.
I agree with that.
And again, you have appreciation, but it's supply and demand driven.
Yeah.
More buyers.
Yeah. There's nothing sketchy going on
right.
anymore, right?
It's driven by the consumer at this point.
Exactly.
That's right. Exactly.
Yeah.
Yep.
I mean, people have been saying, the market's going to crash for the past 8 years, 7 to 8 years.
That's right.
Because, some people get excited about that. Investors get excited about, okay, here's my chance. The market's about to crash. But, like I said, people have been saying that for years years. Robert Kiyosaki himself, I think, a lot of people live off that fear. of the market crashing,
Yeah.
and it kind of deters people from buying, like we said earlier. But that can actually hurt you now in this market, because if you delay, like you said, your buyer delayed 1 year and then he couldn't afford the house, the same house. So, a lot of the top analysis, people like Freddie and stuff like that, they're projecting the market to go up another 20% this year.
It's going to be strong.
And they've raised conforming rates knowing that the market's going up.
That's
so
right.
that just shows to you there that if they're going to raise conforming rates, then they have confidence the market is going to continue to rise.
Yeah. Conventional loan limit, 647,200. I mean, that's a big jump from last year. And
it was 510, 400 last year.
Right. Yeah. It's a huge jump. So, and I always, tell customers, and I'm a firm believer, you cannot time a real estate market.
No.
You really can't time. No. It's really hard you can't time a stock market either, but it's even harder to time a real estate market. So I think,
hey guys, can you break down what those numbers mean for us regular folk?
Which numbers?
The 5, 10.
Okay.
You guys said it really fast.
Yep. So the conventional loan limit. So to do a conventional loan, right, which is insured by Fannie Mae, Freddie Mac, which is a quasi government agency that backs our market, anything from a loan amount size from $647,200 or less is in the conventional loan limit. Now that will vary by state and by county, but that's like here in Georgia. I think there's only one county that's higher than that, but for the most part, that's all of Georgia. And last year was about 510,000. So it's Fannie Mae and Freddie Mac have raised, or FHFA have raised those loan limits. So more people fit into that conventional loan. So
what's the complete difference in having to get a conventional loan versus a jumbo loan, just in simple terms?
Rate wise, not much of a difference. However, the qualifications, you have to have more assets and more reserves for jumbo loans.
Okay.
So a jumbo loan is a loan above that limit of 647,200. So typically more money in the bank. Might have to have some more credit trade lines. We have a really good jumbo product that is pretty makes sense. But generally, as a buyer, you have to have more reserves, more cash.
Cool.
Which makes sense, right? You're buying a much larger home. You have to have a little bit more money in the bank.
Yeah, so it's going to take me a few more years is what I'm hearing.
Well, you keep doing what you're doing, man. You'll be fine.
You got it, bro.
You guys, I really appreciate you guys coming down. This has been awesome. Really enjoyed meeting you guys. So just for the audience, how can we reach you? You want to let us know how people want to reach out to you?
Yeah. I mean, we'd love to have everyone that's interested in, searching for a home right now. We have one of the top search tools in the area.
Cool.
It's powered by FMLS, Georgia MLS.
Nice.
So you're going to get, in some areas of the state, you can only see houses on a certain MLS. So we have both of them for our area. So some agents only list on the Georgia MLS.
Right.
And some people most agents do both, but some only do the Georgia MLS. So we have a powerful website. It's therealtyqueen.com, short and simple. And you can search any county in Georgia, basically.
Cool. Awesome.
That's powered.
Or if they want to call and talk about real estate, they can reach us at 678-786-4444.
Cool.
And we'll all be happy to have a conversation with you.
That's awesome.
And we have a podcast now too. It's Real Life Real Estate on Apple, Spotify,
nice.
Whatever you're interested in. Follow us on YouTube.
Awesome.
Is it the Realty Queen on Instagram too?
Yep.
At Facebook?
Yep. The Realty Queen team.
Excellent. This is our first podcast, so I look forward to doing more of these. And just
fun.
It's really cool.
Did great, man.
It's great talking to you guys.
Good job.
Learned a lot.
I would have thought this was your 100th one. How things went.
You're so kind. I appreciate it. You guys did great, and thanks for coming out.
Thanks,
and
man.
Alex, man, thanks for setting it up.
We'll see you next time.
Of course, man. My pleasure.
All right. Take care.
Thanks. Bye.
See you.